All right, welcome back, everybody. It's Tuesday at 10 a.m. So your favorite hosts, Tim and Tim, are back again for another fun episode, and it is going to be the last episode of 2025. A happy, merry, early Christmas to everyone out there that's watching the show, whether it's live or later. We appreciate everybody joining our weekly calls every Tuesday at 10 a.m. where we talk about real life events, lessons learned, mistakes made, ideas found. I mean, really, nothing's off the table when we come to
Ideas
these
found.
shows. Ideas found, yeah. Sometimes saying things out loud makes me say, "Wait a second, that
I had
makes
an
sense."
idea.
I have wonderful ideas.
We did
um,
have a really good one this year. Not gonna tell you about it, though.
can you text it to me? Because I don't know what you're talking about. But yeah, I just love doing this show, and I just want to say how thankful we are. Oh yes, aha. um, how thankful we are for everybody that joins their show. First person that comes to mind, Dennis Russell. I think you've joined every single live show every Tuesday, every week this year. You gotta send me your address and I'll send you a little gift, man. Appreciate you joining and sharing our show every week. And everybody that joins, I know there's a bunch of people in our coaching group from Making Moves in Multifamily that watch these live shows. We talk about them on our weekly coaching calls. We talk, some of the ideas that we come to talk about come from those coaching calls from the week prior.
Yeah.
So just again, appreciate everybody joining and hope that you have learned something from these. It's not just like a coffee talk show, even though I generally am drinking my coffee every morning when we're doing this show. We're talking about real things that you can there you go. You can real life things that you can implement, right? Of how to be a multifamily operator, sponsor, syndicator. There he is, the man. Dennis,
There's
did you just
Dennis.
miss my whole spiel about you? You're gonna have to go back and watch the beginning because you joined 6 minutes late. Now you're gonna have to wait till 10:30 to watch it. So.
To find out what he won.
Well,
Uh,
I know. All right, this week we're talking about what the heck just happened and what comes next in real estate. And really, this was Tim Vest's idea. He sent me this text this morning. He was like, "Dude, we're talking about this." So, Tim Vest, I'm going to let you take it from here and talk a little bit about where this came from, what you want to talk about, how you want to cover it, and let's roll.
Man, don't you know? I mean, we've been doing business together how long? Don't you know I come up with the ideas? I don't do anything with them. I just give them to you. Like, come on.
What's that in the EOS, right? Classic entrepreneur, right? I just
Yeah.
cause waves, I throw out ideas, and I expect everyone else to finish them.
Yeah, like my old boss used to be. He's like, "You come with ideas, you never come with solutions." I'm like,
Nope. I'm a great idea guy.
"I think I need to be promoted, Bob."
This is corporate life, right? Great
Yeah,
ideas
yeah.
equal promotions.
I sell like a sea level as far as I'm concerned.
Hmm. Oh yeah, that's good.
Hey, one thing real quick, because you mentioned something like our group making moves. I suck at like figuring out the camera thing. Making moves. Like I think he hit on something that's really cool. Is like over the last couple of years, we've had people in the group and stuff, and now it's like really neat to see the guys that joined a year or two ago. They're coming to the table now with ideas that, like, there's a couple of guys in there this year that have come with things that I've been like, oh yeah, I like that.
Oh,
Like I
yeah.
might. So it's like Tim and I started as coaches, and now it's really just a group of people hanging out, talking about ideas, sharing ideas, and like the guys that were students are like in there sharing things back to their original coaches, back to other guys in the group. It's been really cool to see. Um,
Oh, dude, that's a really good call out because there
yeah,
are a lot of things that we talk about. Like, man, I have no idea how to do that, but I know who does.
yeah,
And
yeah,
and it's really cool to see how some people had joined or started in a group with like no experience, and now
yeah,
they've done a bunch of different deals. And what they've found is what their expertise is in. Like, Dennis, for example, not Dennis Russell, but our other Dennis, he's amazing at finding small and local banks for lending. I mean,
yeah,
he's really good at it. And I know that I'm not good at it. So I go to Dennis. I'm like, hey, can you help me do this? Or do you know a bank
yeah,
or something like this that I can connect to? And it's just really cool to see how everyone, when they get started in multifamily, they're like, what am I going to do? I want to just do deals. I want to make a lot of money. But, we always talk about, you got to find what your value is. What value do you bring to bring to the table? And over time, people naturally tend to drift towards what they're good at and what they like to do. It just takes time to get to that point.
Yeah. And then, sorry, one thing, I know this is not what the show is about, but I mean, maybe it is, because this is things we've learned through the year, right? Because one other thing I'll call out, Joe, I know you've called me a bunch of times apologizing for like things you've asked during the year. You feel bad because you feel like they're elementary questions and stuff. But at the same time, Joe, you have asked me questions through the course of this year that I've forgotten about. And it has reminded me like, that's like a basic thing that I'm probably not doing as well as I should. I need to do better about that. Right. And then too, you've also asked me some fundamental questions that's made me go back and like, hey, the fundamentals, the foundational stuff, I maybe need to like review that and refresh that to myself, because you've found a couple of things like over the course of the year where it's like, I overlooked that, I'm over here doing this, and I forgot about this kind of stuff here that really makes this work better. Right. And so, hey, give yourself a little pat on the back, man. Like, I know you're coming in and like some of the new deals that we're doing and stuff, but it's been really good for me as well. So anyway, the show, like what we're talking about today, and I'm going to look over there. Yeah, there, because I have notes. Can you believe that? I never prep. Anyway, so hey, Tim, let's talk about, I think one of the biggest things for us this year is the easy one is what went sideways in 2025. Because Tim and I call each other all the time, and we're like, could I just get another kick in the nuts? I mean, today, today's there you go, Joe. Joe knew what I was talking about. So it's like, man, can I get another kick in the nuts? I'm gonna take the easy one. You gave it to me, so I'm gonna take the easy one. Refinances. You want to talk about things that went sideways for us in 2025? I would have to say the majority of the refinances.
Oh my God.
We've talked about it on this show a little bit this year, maybe more than a little bit. This has been a really, really challenging lending environment. Really challenging. They're taking a long time. Even when your operations and your rent roll and your finances improve over the course of like trying to get a refinance done, like their proceeds go the wrong way. It's just been a really rough year with in terms of refinances. What do you think?
It has.
Yeah,
it really has. I was having a conversation with an investor yesterday, who I talked with for a little while, and I mean, hell, we had this conversation, with a couple different, GP. I had this conversation twice yesterday. They were talking to us. They're like, "Hey, what did you guys do in 2025?" We're like, "We kept our heads above water." Hitting a refinance right now. Yeah, that's right. I mean, hitting a refinance and just trading out the first debt position, that's a win in today's market. And they were like, "Well, how come you didn't buy anything?" Because we had our hands full with operations. Being a vertically integrated company, handling operations, construction, the equity, the insurance, the taxes, like literally everything. It all rolls up to Tim and Tim, right? And we only have so much capacity and bandwidth to be able to do everything correctly and do it well. We've replaced a bunch of team members. We've tried new systems and processes. We're trying new AI systems. It's been a lot of experimentation in order to hit operational efficiency even better than what we've had in the past, so that we can meet those refinance targets and trade out our debt. And that's really been the theme for 2025.
Yeah, and Tim, I think you hit on something. And Tim and I get here, we're pretty transparent about a lot of stuff. So I think another one that kind of what went sideways is like some of the operational stuff went a little bit sideways in 2025 because of what you just said. And I think you saw it. I called it out this weekend to one of our partners. I'm like, you just said what Tim and Tim, we only have so much capacity, right? And we're going after these refinances. We had a fire this year that we had to get a property back online. We spent a lot of time on that. Some other operational stuff. But then all of a sudden, some of the little foundational stuff that we should be doing within our company and within our property management, like that did not get done as well as it should have been done. A little bit of that goes back to some of the team members we had within the company at the beginning of the year that we were relying on that just weren't performing. And we've brought in better team members now that are performing at that level. So things are starting to improve. But over the course, there was a good 6 months there, Tim, where
Easy.
it's
A
like
solid 6 months.
where Tim and I were playing co-CEOs and manager at the same time.
We were director of operations. We were regional
Yeah.
managers. We were property managers. We were the co-founders of the equity company handling tax insurance and investors and refinances, and everything in between. I mean, we definitely stretched ourselves pretty thin.
Yeah, so we would get some calls every once in a while from some partners, multiple partners that would be like, "Hey, when I call this number, what's supposed to happen?" Right? And we're like, "Oh, thank you for calling that out. We need to go look at that." And so that really started to like bring up like, "Hey, we really do need to go back to who, not how." Right? Like for a little while, we were definitely in the how because
Mhm.
like I feel like I need to understand a little more how the how happens.
Yeah.
So that we can be better CEOs. So at the same time, but that took away from some other capacity. So we're trying to get through these refis that took way more time than it should have. So some other things from the operational side fell to the wayside, and we're working now to address those things. Like you said, so we hired some new employees that are doing a really good job. We're implementing new phone systems, new AI, new website, you name it. We're doing a pretty big overhaul of the company internally.
Yeah. Some would argue that you should have started out this way, and we didn't know what we didn't know. So here we are.
But here's what I always push back on that is like, I don't disagree. Like ideally, in an ideal world, you start out like with all of that in place. But like you said, I didn't know what I didn't know. And I think you could go into a guy that started a company before and been a property manager before, and they would set things up. And even over the course of time, they would absolutely pivot and alter how they're doing business. I mean, most businesses alter as they mature. So, it's like the systems and operations that got us to here aren't going to get us to there. And what we're doing now is we're like fine tuning what we're doing today, and these systems are going to be scalable to get us to there as well.
Mhm.
They should let us double our portfolio essentially if we choose to, because we're doing like staff supplementation, right? Like AI is not replacing staff; it's supplementing our
Preventing.
current staff, right?
Yeah. Yeah. I like the way that you said it when we were on board, where we still are onboarding. Is it's not going to save us any payroll today. It's going to save us future payroll so we can continue to expand and reduce our operating costs.
Right. So, and then it's going to make us better today, so it does those things. So, I would say that's one of the things that went a little sideways for us in 2025, but it was a good sideways because it taught us some things. And we're moving into
Absolutely.
2020. We're moving into 2026 with a better plan. So
Yeah. Well, I think that's a really good segue kind of into what do we think is going to come next in real estate in 2026, and something that I like to talk about, and I've mentioned a couple of times, but I'll reiterate now just so everyone is very clear, is our underwriting thesis and business model is, I don't want to say changing, but having a strategical step in a different direction. It's not like a perpendicular change, but it definitely is like an acute angle. We very heavily went on the value add deals,
Yeah.
and almost too heavy. And what we're dealing with right now, I mean, we're working through 6 refinances, and now a 7th deal is going to be closing next week. All at the same time. And what that has taught us is that the stress that it puts on your operational team members can be a bit unbearable. Now, for Tim and I and for our investors, it's great. We're like, yeah, we're making moves, baby, right? I mean, that's what we're all about, is making moves. But at the same time, we have to think about operational capacity of our team members. And having a value add deal as every single deal in our portfolio brings on not only a lot of risk, but a ton of stress. And what we're going through right now is, we're executing on business plans and refinancing a lot of deals, but each one of those refinances comes with its own level of stress, difficulty, hardship, et cetera, and so forth. With the real estate market, has it's changed over this past 12 to 18 months is commercial multifamily property values are down in the Carolinas 20, 30% pretty easily. We've got very clear examples of deals in Charlotte that sold for 200 plus a door in 21, 22, and now they're in foreclosure and being traded at below the debt cost of like $150,000 a door. So I mean, right there, that's a 25%. Was it 20%? Yeah, about 25% price reduction right there on some assets. So, a lot of the value add deals have not printed the money that we had expected them to. Being able to refinance the debt speaks volumes because we've been able to increase the equity and the property performance in order to trade out the debt, which negates the 30%, 20 to 30% reduction in values, right? So like we've created equity, but we've lost it through decompressed cap rates and increased insurance and tax numbers, right? I mean, there's no argument there. We've talked about it all the time. Going forward in 2026, we're changing a bit of our underwriting model and what our expectations to investors are going to be. We are looking at deals on in-place cash flow with value add and appreciation and equity. That's all gravy on top. It is really going to come down to, I will buy this deal with an agency loan as long as the deal is 90% occupied and 90% collected or better. And I will manage it over a 5-year period and walk up the rents over a 5-year period rather than try to rip the Band-Aid off and do all of the renovations and all of the value add in a 12 to 18 month period so that I can refinance at the end of 24 months. And I'm not saying that we won't do deals like that, but the volume of deals that we do in those value add buckets will be significantly different. And brokers have told Tim and I that we're not the only people that have been saying that. Like in the last couple of weeks, they've had multiple groups come to them and say, I can tell you what my offer is going to be right now, and they're probably not going to like it. And brokers are like, no, you're not going to buy a deal. You're not going to buy this deal like that. I was like, good. Well, bring me the deal that does meet that criteria because my track record, of our ability to close and execute when we say we're going to execute. But I'm not buying under the guise of I'm going in at a 3 cap, but you can operate it at a 10 cap in 2 years. Right. I don't care. My investors don't want that anymore. They want consistent cash flow. Gone are the days of the high IRR returns, that everyone was focused on that. You're going to be looking at 12 to 15% IRRs. And the most important metric and conversation to be had with investors is how much depreciation am I going to get because 100% bonus is back, and how much cash flow am I actually going to collect on an annual basis on this investment?
Yeah, we're the goner. Tim, that's a really good point because I think a lot of people are familiar with like in 2021 when guys were like, buy it today for this 2 cap premium, right? And because you can get it to here later on, right? And then that slowly starts to pivot to, hey, it's an 8 cap, pay me a 6 cap because you can get it to a 10 cap. And essentially what they're saying is like, I've shown you the path to a 10 cap. So I want a little credit for my business plan. Right. And it's like, and just full disclosure, Tim and I did some of that, right? We were like, yeah. Okay. We can continue down this path. Well, when you continue down this path and cap rates like go backwards, all that value that we were creating as we went, just it's not there, right? Or at least you're not able to get it in a refi. And that's part of the issue is like, hey, we continued down this path. We did what you said. Unfortunately, we're exactly where we were when we paid you in terms of value. And, it is what it is. So, now today, what we're saying is, hey, no, none of that. We're going to pay you exactly what for the work you did, right? Here's the value it is today based on the work you did. And this is what we're paying. And if cap rates are 8, we're paying an 8, right? So that's a big lesson learned as well. And just one other thing that Tim mentioned is we've had a lot of conversations about, hey, I don't mind a value add deal here and there. It's
Hmm.
great. But at the end of the day, I really like to stabilize things that, I can put on long-term debt and that cash flow. And that's what we're going to do. And guys, that's really what real estate was for the longest time. I'm going to go
Hmm.
in there, put it on stabilized debt. It creates this cash flow over the next 5 years while it's on stabilized debt. That cash flow increases. My debt stays the same. I give myself a little raise every year. It's a beautiful thing when it works like that. Um,
Yeah, really, at the end of the day, it's just retraining investors on what
yeah,
you offer and what you expect,
yeah,
right?
because
Because a lot of the investors that we worked with over the last 5 years, it was all, I want in and out, I want my money back in 2 years, I want this, I want that, and it's like, well, that's just not what it is anymore, you know.
yeah,
Um, and it's a lot easier for me now to have that conversation and say, this is what I offer. If that doesn't work for you, then you're going to have to go put your money somewhere else. But if you want to blend your portfolio with somebody else's and mine, that's completely fine as well. But understand, this is what I'm offering, this is what I'm capable of doing, and this is what I want to offer as a service to investors.
yeah, yeah. And Tim, you bring up a really good point because it's like investor sentiment has changed, or it. I don't think it changed as much as investors realized what they were actually looking for, right? Like we had all these investors and they were like, I like that pref. But they saw that big equity multiple over 5 years. And it's like, but like if you're looking for cash flow, the pref is okay, but pref doesn't mean cash flow, right? That just means you get a preferred return before anything else is paid. And I think a lot of investors like confuse that with cash flow, and then they come out and they're like, no, I really wanted those quarterly payments or monthly payments or annual payments or whatever it was. It's like, you wanted cash flow. Um,
Yeah.
so
I've had a ton of conversations with
yeah,
investors now. I mean, I literally had a conversation this morning. I bet you he's watching this video right now, or he will be tonight. And we literally talked about it. It was like, hey, you need one investment that's in your long term, 7 to 10 year bucket that's going to double or triple in
yeah,
equity. It's, not expecting cash flow, but 75% of the rest of your portfolio you want in very stable, long term cash flowing assets that pay you distributions regularly because you need that money.
yep, yep. So hey, real quick, Smitty, we a couple of different AI systems for operational side on the property management business. Elise AI is what we went with.
Hmm.
And then internally, not that this, I don't know if this matters to you, but internally with our employees, with our payroll system and our HR system, Paylocity has an internal AI system that we are making more and more use of as we go. Um, it's been really nice. Our employees can actually go in and ask it questions that comes back to our policies and things with payroll and HR support and stuff like that, and we get less calls because it
Yeah.
answers it for them. Um,
Yep. Yeah. That's very true.
yeah. So, but those are the two: Elise AI and then the internal AI for Paylocity. Um, what else, man? Hey, here's one. And I don't know if we got much to talk about this because I don't know if we're smart investors or not. But how? What did you see, Tim? What did you see when you talked to like some of the guys that you network with and stuff? Like how other operators survived in 2025? Um, I think we've actually hit on a couple of them in terms
I mean,
of
a lot of it was bringing operations in house.
yeah,
Um, Especially when you first start out, you're able to operate at cost, and those cost savings help negate some of the increases in the expense lines elsewhere, right? So, I say it all the time, as a property management business, as a third party fee company, is a for profit business, right? They have to make money to pay their bills and survive. Well, when you're vertically integrated, it doesn't have to be a profit center. It could be a net zero center, right? You cover your costs in order to operate the deal successfully, and that's about it, right?
yeah,
It does come with a lot of work, but it comes with a lot of advantages too, of being able to operate your deals and have insight to your deals, and attract a different quality type of investor because you're vertically integrated. So a lot of people have done that, and it doesn't matter, if they have 100 units or 1,000. It was, I'm going to bring it in house. We're going to manage it ourselves. We're not going to add any additional markup or costs or fees. And even if those like management fees were accrued, for example, that helped the cash flow of the property survive, right? So that they could pay their debt service, so that they could, do what they needed to do in terms of renovations to get the property back up to where it needed to be. Savings on the operational cash flow side of things are what I've seen a lot of people do in order to survive this
Yeah.
past 12 months.
Yeah. Yeah. I think that's a really good point, Tim. I, I I don't really have much to add to that other than just to say, the guys that went out and kind of thought outside the box a little bit, looking for tax abatements, looking for ways to decrease their insurance costs, looking for ways to offset insurance costs and other expense line items within their company. Those are the guys that survived this year, in my mind. Because that's been one of the biggest hits, guys. It's just the expense escalation. Because rents across the board have largely stayed flat through the year, but expenses have increased. So
yeah, man, a lot of rents have stayed flat. 2026 fair market rents for Charlotte went down 6.5%. So I mean, I think we're going to start to see some rent reductions here.
Yeah.
And if you're not having a rent reduction on a renewal, most people are going to renew at what you're currently at with no increase. But in order to fill a vacant unit, you're likely going to have to give a concession or come down on the rent.
Yeah. So I think those are, those are some of the big ones. But so hey, I know we're getting up on time. Here's the one I like. So one bold prediction from each of us. What would be your bold prediction for 2026?
In terms of what? Is it in terms of the market, or is it investor sentiment? I mean, that's pretty broad. I mean, there's a lot could happen in 2026.
Any of it. Real estate market, investor sentiment, market in general, Bitcoin. What's your bold prediction?
I actually did buy some Bitcoin. I finally owned some Bitcoin.
When it dipped, you got it on the. Did you get it on the dip?
Yeah, I did. Yeah. I got some of it at 90,000, and then most of it at 100. So, but it was like down 25 or 30% from its high. I was like, this is a good pullback for me. I'll put some money here. 2026 real estate prediction. My bold prediction. I don't know if it's really a prediction. I'm just kind of paying attention to a lot of the market movers and indicators that the Fed is talking about. Rates continue to go down at the Fed level, and that signifies to me a weakening economy. With a weakening economy, reducing rates is going to spur job growth. However, it's going to increase inflation. So while rents have stagnated, this last couple of months and maybe a little bit into next year, I do think that we're going to start to see inflation come back pretty heavily next summer, maybe even a little sooner than that. And we'll start to see some top line rent growth again towards the end of 2026. If rates go down and rents continue to trend up, I think that 2026 could be the pivotal year that kind of sets the stage for 28, 29, and 30, right? So it's going to take a little bit of time to season, right, for investor sentiment to come back. But I think you start to really see some pickup in transactional volume starting towards the end of 2028, demand picking up in 2029, and then being back to a healthy real estate market where transactions are transacting, right? It's not, you have buyers and sellers that have reset expectations. Transactions will sell at, reasonably accommodable prices. And I think investor sentiment might come back to saying, I think it's time to start investing in real estate again after this big shakeup in property values. And, hopefully for Tim and Tim, because we're going through all these refinances, that 5, 6, 7 years from now, when we bought these properties 7 years ago, it'll be like, wow, you guys were geniuses, right? So hoping and praying that the real estate market, this is the pivotal year for real estate that will start to come back. And we'll see, with the new Fed chair, when they come in May, when Jeremy Powell's gone, and see what that ultimately has on the real estate market.
Yeah, good. Those are good. I think for me, and because I've heard this a couple of times this year after the big beautiful bill happened, which by the way, I just heard is B3.
B3.
People call it B3. I was at a conference and they kept going, B3, and I'm like, what? So that took me a second. A little slow in the uptake sometimes, guys. So for me, my bold prediction is one of the big things that was in that bill that I've heard a lot of hopefulness around is the depreciation, um, the 100% bonus depreciation coming back. I do not think it is going to have the impact on the market that folks are hoping it will have. It is
Mhm.
going to be what it is always meant to be for the average investor. I'm not going to say for the big guys who are chasing it, but for the average investors like us, um, it is a bonus. It is truly a bonus. It's not a
Yeah.
reason to buy a deal. It's not a reason to hold a deal or operate at a deal. It's a bonus.
Yep.
And I've heard a lot of guys talking about, I think it's going to cause the market to heat up again. And I'm like, no,
I
ain't
don't think
happening.
so.
Ain't happening. People are going to look at it exactly for what it is I'll buy a deal based on the fundamentals, and that's not one of the fundamentals.
Yeah.
So
Cash flow, number one, equity growth, number two, depreciation, number three, in that order.
yeah. And hey, real quick, Smitty, Elise AI, Elise AI, like the name Elise AI.
So funny thing, I'll talk about this right now. We need to pick a name for our AI system, and my wife thinks we should call our AI system Tim. I was like, I like it.
Timmy. But
I talked to Tim on the phone. No, you didn't. Yes, I did.
Oh God, that would be so confusing.
I
Oh,
talked
yeah.
to the owner, Tim. Are you sure about that?
Hi, this is Tim.
Matt Reese
Conrad.
is Conrad.
Where's that come from? Matt, where's that come from? What was what was the name of the system in War Games? That would be kind of
I don't
funny.
know.
Anytime, Smitty. Yes, that's right. You got it right. No clue. I think I got to look that up. What was the name of well, real quick. Google's great, right?
Yeah, I don't know. That is it like an older movie or something?
You've never seen War Games with Matthew Broderick?
No. Willie McNeil.
Wopar. Couldn't be Joshua. That's it, Joshua.
Joshua.
Yeah, yeah. Good. It's a good movie. You should go watch it sometime.
Yeah. Well, I plan on taking some time off starting tomorrow, so maybe I'll have some time. But I told Danielle that you encouraged me to do this project, and she's like, "No, absolutely not."
You know what,
like,
Tim?
You still haven't finished some other projects around the house. I was like, "Name one." She's like, "The curtains in your office." And I said, "What? They're hanging. They're done." Like, no, I haven't taken them down and cleaned them yet. I was like, "That's it's done in my eyes."
I have an unfinished project right there. I have oil rub bronze doorknobs and brass hinges.
Oh, fun times. Yeah.
Yeah.
Good luck with that.
Hey, you know what's funny? No shit, man. Over the 19 years I've lived in this house, like every once in a while, a Saturday I'll roll around and I'll get like 12 hinges out and 4 doorknobs, and I'm like, I'm gonna do something. In my house.
On board.
Like but hey, after I had that conversation with you yesterday, Tim knows like I got a lake house that I'm doing some renovations on. I'm like, you know what? I could do the master bedroom myself.
Yeah, tile work. It's just a little bit of grout.
I just got to tear the walls out, move some of that framing around, do 3 doors.
It's not that hard to pull the electrical through. You just pull the staples off and put it where you want it.
Yeah. Plumbing, I can move plumbing to that wall over there.
How hard is it to use PEX nowadays? They make a special tool. You just crimp it on. It's not that hard.
I can tell you how that would go. I'd get it all ripped out. I'd do the electrical. I'd do the plumbing. And then I'd be like, I really don't want to do the drywall. And I'd call somebody.
Yeah.
At that point,
I'd
call somebody.
It's just a little bit of drywall. It's not that bad. So
I
all right, guys.
I'd do the first like 4 panels and be like, I'm done with this.
Yeah, no. No, I like your idea. Just do the framing, do the trim work, pay somebody to come in and do the drywall, sanding and mudding. And, painting is not that bad when it's just a little spot or whatever, but pay somebody to do the drywall and paint work. And then, you can handle all the rough end stuff.
The NC, what are we talking about?
Probably the sign. So quick funny story. This was made by a Army veteran that a friend, one of my friend's ex-girlfriends was like living in Mooresville, not far from where you live, Tim. And it was a combat veteran, and he was blown out of a helicopter twice. And he was on full medical disability from the military. And this is what he would do with his time. He would take pallets and he would make these North Carolina signs and he would stain it. And I paid $75 for this thing. And it's huge. I mean, that's gotta be, I mean, it doesn't even fit in the truck bed, in my truck bed. And I have a 5.5 foot truck bed, right? So it's like a 6 foot sign. It's huge. And it's one of my favorite things. I've had it since I moved back to North Carolina in 2015 from Manhattan.
Do you have that in your house here in
Yeah.
Charlotte? No, I didn't.
Yeah.
I don't think I knew that.
Yeah, no, it was upstairs. It's hard to find a big enough wall for it to fit on. So this surprisingly is the only big enough wall in this house because there's so many edges and corners and windows and stuff. So
yeah. Hey, Joe, appreciate it, man. Really, truly, I appreciate that.
Yeah, thanks, Joe. Appreciate it. I know we've had some really great conversations with all of the deals that you've worked on, and you've made an absolute metric ton of progress in the few months that you've been in our group. Appreciate you always bringing deals and questions to the table and having good, heartful conversation. I mean, sometimes it gets a little heated, but that's good. I like it, right? It's we challenge each other on assumptions and prove it to me kind of mindset. And it's for the better of the better for the group. Absolutely. So again, thanks everybody for joining. Appreciate you joining all the calls this year and look forward to getting back into it in 2026. Take some time off, enjoy the Christmas and the New Year with your family. Thanks again. Peace.
Happy holidays, guys.